Alrighty, welcome traders to our Sunday weekly webinar. Thank you guys for joining us. Today is Sunday, January 29th, 2017. We have about 3 days left in the month, ready to go into February of 2017. If you guys are just tuning in for your first time, if you guys don't know who I am, my name is David Schinkel. I'm the CEO and founder of Positive Traders. I'm 23 years old. I've been trading the financial market since I was 19, and I started this group about 7 months ago to help people just like you kind of get your bearings in the markets and really just kind of help you out, kind of learn the markets the same way I learned it. I hold these free Sunday webinars every single Sunday. We haven't missed a Sunday since August of last year. So if you guys like what you hear, definitely tune in. I do this every single Sunday. I do also offer a paid group for people that want to take it to the next level. In our paid group, I have a free trade copier that I aim for 5 to 10% growth per month. I also give out about 5 to 10 signals, usually averaging about 10 signals. Last week, I had 12 that I gave out. Every single signal comes with exact entry, stop loss, take profit, and analysis, so you guys know why we're taking the trades. And then we also have daily live sessions. So I do something similar to this, but on lower time frames. You guys will notice that these weekly webinars kind of go over my bias for the entire week, where I believe price is going to go. And my daily live sessions, Monday through Thursday, run for about an hour. If you aren't able to watch them live, they are uploaded to the back office on our website, which if you want to learn some more information when we're done here, go check out our website. It's right here, positivetraders.us. You can scroll through it and learn a little bit more about us. But to kick off the week, guys, thank you guys so much for being here. In our premium group last week, we made about 150 pips. We're sitting over 400 pips in profit for the month, aiming to get over 500 pips before we go into February. So that's a little bit of background about myself. So if you guys are tuning in for your first time, I always go over the economic calendar first. It's very important to understand, and be aware of what economic events are going to be being released throughout the upcoming week. So our two main, there's a lot of events this week, but our two main key risk events this week is going to be Wednesday's FOMC for the US dollar. So the Federal Reserve is going to decide if they want to increase, decrease, or keep interest rates the same in the U.S., as well as Friday is another big one. So we have our non-farm payrolls. If you guys are just brand new to trading, make sure you Google, non-farm payrolls, Forex, and you watch, maybe a quick YouTube video or read a few articles on it. It is probably the most consistently volatile piece of news that comes out. It's released on the first Friday of every single month. It is also released with the U.S. dollar unemployment rate change. So you can see that our forecast is actually forecasted to stay the same at 4.7% unemployment rate, which is actually really good. We haven't seen unemployment rates in the U.S. this low since 2007, 2008, back when the market crashed. And as well as our big key ticket item is our non-farm employment change, or also known as non-farm payrolls. So this measures how many people were added to payroll companies, basically how many new jobs were added in the U.S. in the past month. So that number is released. Obviously, a high number is good for the dollar. A low number is going to be bad for the dollar, okay? And you could say an averagely good number is around 200,000 jobs. You can see we're coming out at 170,000 from the previously released last month's 156,000. So a little small increase, but keep in mind in the back of your head that this is always just a forecast. It does not mean that it's going to come out at this number. That's why they call it a forecast, kind of like the weather, right? One day it might say rain, maybe it won't rain. So think of it that way. So jumping right into the technical analysis, guys, I run through all the pairs and indexes on the side except for oil. I just have oil on here for my own bearings. I don't give out any trades or analysis on that. But I do look at the dollar index and these other 9 pairs. So we're going to start it off with gold. All right. So gold, last week we did see a little bit of a bearish move in gold. We saw this bearish engulfing candle actually form, engulfing last week's previous gains up into the 1215 level. We pushed it back down underneath the 1200 level. I believe this week, just based purely off of price action and the dollar strengthening, that we're going to be looking for a continued sell-off on gold. Now, last week, if you guys caught our analysis last week, we were looking at buying the dollar pretty much all week. I didn't give any analysis on gold. I said stay away from gold last week, and sure enough, that worked out in our favor, because although there was a lot of buying happening on the dollar last week, we still saw, sell off on the dollar last week. We still saw gold fall pretty decently last week. So if you guys need to understand correlations between pairs, generally when gold is going up, that means that the dollar is weakening. When gold is going down, that means the dollar is strengthening, or vice versa. So you'll usually see an influence on gold based on what's happening with the dollar. So this is you guys can see my projection. I think we're going to be heading down towards the 1160 area. When we bring it on to lower time frames, look to short this pair. Even around this area is good to be looking to take an aggressive short. However, I would be looking to short once last week's lows are broken. Look for a break and then a retest, and then heading down to 1160. That's a easy 150, 200 pips that you can catch this week. Just make sure you're just on the right side of the trade. All right, dollar index. All right, so the dollar is continuing to fall. I mean, last week we saw it fall pretty decently. On Thursday and Friday, we did see a little bit of a retracement of the drop from Monday and Tuesday and Wednesday's candles. And if we look at on the weekly, the higher time frames are key, guys. Always start on the higher time frames and work your way down. If you guys can see, we actually got this, we can call this a bullish exhaustion candle. All right. So we have our bullish exhaustion candle on the weekly. My belief is, and again, guys, this is just my bias. Okay, you guys know, like I said, I've been in the financial markets for about 4 years. This March will make we'll be going on my 3rd year of being a full-time trader. So this is just my analysis. Okay, people can be wrong, but my analysis is that I think that we're going to see some buying in the dollar this week, and we're going to see this push up, and that's going to be our catalyst again for gold going down. Euro USD. Also, another correlation, if you guys are brand new, make sure you guys, it's very important, guys, if you don't have a trading journal, you aren't taking notes, you're just watching this blindly, it really does you absolutely no good, because I go through all these pairs fairly quickly. It's going to be hard to memorize, what every pair that I'm going through. I highly recommend, if you don't have one this Sunday, grab one for next Sunday, get a trading journal, write down this sort of information pair by pair. Have all these, I don't switch this order up, just have each pair written down and then write down. You can write down my analysis on this and why I think that, okay? I'm not going to just blindly say I believe it, just because, but I'm always going to say why. So when we look at Euro USD on the weekly time frame, we did see a little bit of a retracement from this previous drop early last year. It has pulled back up into like the 107.30 areas, and we have, you guys can see right here as I marked off, a bearish exhaustion candle and somewhat of a doji. So we are seeing some big resistance also on the weekly time frame. We can see this resistance in this area. Let me go ahead and mark it off with a ray. All right, some lows from last year and the year before that, actually in 2015, we're actually hitting that weekly resistance in this area, which we saw last week. We saw sellers come back in around that weekly resistance last week. So I think this week we're going to see a drop in euro dollar. Going back to correlations, also gold and euro dollar for the most part follow each other, not 100%, but they do have a fairly strong positive correlation to each other. And if we look at this on the daily, we did gap up this week. The markets did gap up, so we might end up moving a little bit sideways before we do see a drop. But once we do see once we do see this support broken in this area, we will see a sharp drop to the downside. So be on the lookout for this. I think Euro USD offers great risk to reward this week, guys. I'll be pointing out some of the other pairs too. I think so. Pretty much, I think gold and Euro USD both offer some great risk to reward this week. USD CHF generally has a negative correlation to Euro USD. So if we're looking at selling Euro USD, you're generally looking at buying USD in the Swiss franc. Now we have been making a series of progressive lower highs and lower lows, which could prove difficult for the bulls to break this week. This line that I have drawn on the 4 hour is just my personal analysis. However, it will be invalidated if we see a 4 hour or daily candle close below 99.60, this area right here. This is key support right now. We have this big bear flag forming on the 4 hour, very tight consolidation range. So I would not be surprised if we did drop and maybe retest and continue moving lower. However, if the dollar continues to strengthen, we should see this pair do something like these lines are seeing right here. But remember, This is invalidated if we see a 4-hour or a daily candle close below 99.60. All right, but price action has been pretty good on this pair. However, with this gap, we want to see what kind of happens. We'll let the Sunday markets pan out, and then we'll move from there. Also, I wanted to just mention, if you guys have any questions throughout this session, there is a chat box in here. If I'm going too fast or you need some clarification, you have a question about our group or anything like that, feel free to ask in here. So pound dollar, I do want to just point out one pretty significant trend line that got broken last week. So just to kind of give you guys an idea of where we are in the markets, this is Brexit. Okay, this is the flash crash on the pound, if you guys have been trading that long. So hopefully this gives you guys an idea of where this trend line is. So back in July, we start this trend line on the 4-hour right here. It makes a bunch of touches. All right, it makes a bunch of touches. So this is a huge trend line that we've been playing with all the way up until this year. All right, all the way up until this year. And we're still respecting this trend line. Now we're on the top side of this trend line. We saw it touch right here, break, and then come and retest. So now we're pushing up. With pound strength, even with a strong dollar, even though we're looking at buying the dollar, we could see this pair continue up higher. But my honest opinion, guys, my bias looking at it on the weekly is going to be that we're going to probably see some sideways action. I don't think that this pair is offering some great risk to reward this week, just because if we do see a strong dollar, that should send this pair down. But if you guys just saw it on the weekly, we have two very bullish weekly candles, which could prove hard for sellers to come in. So we could see a push up in this pair or just it moving sideways this week. So I would honestly stay away from the pound dollar this week. Just not great risk to reward. All right, so better risk to reward on euro dollar and gold this week. All right, pound yen, very similar to the pound dollar. Not a whole lot going on. We did see a rally last week after a break of this trend line. All right, and now we're pushing up, but we are meeting resistance in this area. Let me actually clear out some of these lines for you guys. This is from last week's analysis. Let's go right here. And we'll keep that fib there for now, and we'll mark off this zone. All right, and we're meeting this zone right here. All right, so we could see some pretty big push from the pound. We could see some sellers step in at this point, and we could see price move down towards previous fib levels from our swing low to our swing high. We could be met at the 23.6% level or the 38.2% level, come down and retest the bottom side of this trend line again. But I will be watching for confirmations for shorts on this pair. I think there is some good risk to reward. Finally, if you guys have been following for a couple weeks now, we really have had kind of like a giant X on this pair. We haven't really been trading it at all, especially after we saw that 200 pip gap down the week before last. But I will be looking for opportunities to sell this pair. If we can see, what I'm looking for, guys, my confirmation to sell this pair is going to be, I'd like to see like a big red candle form on this daily candle. Not only will that show that sellers stepped in at this resistance level, but it's also going to create our price action formation of an evening star, where we could see price definitely crash another 300 pips down to the top side of this previous resistance trend line, now acting as support. So watch for that. Another great trade this week, guys. So if you're writing this in your trading journals, gold is a great trading opportunity to the downside. Euro USD is a great trading opportunity to the downside, as well as the New Zealand dollar, US dollar, and the Australian dollar to the US dollar. So we have a big trend line that actually got respected last week. So you guys can see this high in September pulling all the way down here. We saw a bounce off the trend line on, I believe that was Thursday. All right, we saw it come up on Wednesday, and Thursday we saw our rejection at the trend line. So our bias immediately went bearish on this. If you guys have read anything about trading books or trading strategies, bearish engulfing candles are huge. What am I trying to say? That they're great opportunities. They present awesome opportunities in the market. So last week we actually had in our premium group, we had a sell stop just below this low, just below the daily low to catch the fall lower. Now our sell stop did not get triggered. However, we are playing in this ascending channel, and I am looking for a break of this channel and a sharp decline on this pair. So excellent risk to reward on this pair this week, guys. Pretty much just as good as gold and euro USD. Look for a retest, possible retest of this trend line, possible formation of a double top in this area. But I do think we are going to see some very strong rejections in this area. So look for opportunities to the downside. Now, our invalidation for shorts is going to be if this top is broken, if this trend line gets broken, if we get a daily candle that comes up and closes above this trend line, these shorts are immediately going to be invalidated, okay? Especially like if we do not form a double top, if it goes higher than our double top and a 4 hour starts to close up here, start to look for bullish momentum to the upside. But for now, I am going to be biased to selling this pair. Same with AUD USD. I'm looking for opportunities to sell this pair. We have some big sideways consolidation going on with this pair. However, it is when we look at on the daily, there's just a lot of indecision. Last week, we saw kind of a sharp decline on AUD USD. We were quite overbought in this area, so sellers stepped in. Now, I believe that it's very similar to NZD USD. We have our top right up in this area. Okay, and we have our low marked off with this green box, this zone in this area, okay? Basically, whichever way the buyers or the sellers break out is which way we're going to look to trade. But I would be expecting sellers to come in and push price down and then a retest and then continue selling down towards the 74 area, which I believe is our 50% retracement level. Let's see here. Actually, that's going to be our 38.2% retracement level. So our first target would be our 50% retracement level from previous, actually, hold on, let's see here. Yes, from our highs in November to our lows in December. We'll actually redraw these fibs out and kind of come in towards more recent swing highs and swing lows. All right, that's what we're looking for. So we can mark off our 50% retracement level. So those of you guys that have also been trading with me know that, you know, I love trading with based off of fib, but my favorite level by far is our 50% fib level. So once we do break through this area right here and we get a retest, I will look for a further sell-off, you know, long-term, about 115 pip drop to 150 pip drop down to our 50% level. What's up, Sheldon? Welcome, man. Good to see you in here. Awesome to see. I just want to say real quick, awesome. Thank you guys so much for the support. I haven't seen this many people on our daily live session in quite a while. So it sounds like you guys got a lot of value last week from the trades. If you guys are just in our free group for right now, definitely expect some exact entries. If you guys took that USD CAD trade last week, I gave out in the free group exact entry, stop loss, take profit, and analysis of why we were taking it, and it ended up going all the way to take profit too, a little bit over 60 pips locked in if you were a part of the free group. So great job if you guys took that call. But you guys, and then also in the beginning of the week, if you guys remember last week, I said we're looking to sell the dollar, and I posted about 7 different pairs, and they actually by Wednesday, all those pairs were over 50 pips in their respective directions of selling the dollar. So I think analysis is on point lately. I think the markets are moving very consistently. Price action is very nice in the markets. We're just awaiting confirmation to keep trading, keep getting in some trades this week. USD CAD, I think, and this is our second to last pair. So if you guys can see on our weekly time frame, this one I'm actually going to incorporate our moving averages that I have on this chart. So we have right here our 100 SMA, our 200 SMA, and then we have our 50 EMA, this green line right here, which is kind of blocked out. You can't really see it that well. That's why I'm kind of so you can follow the line. So we have our 100 weekly moving average sitting as support for the past 3 weeks. We also have this trend line that got broken. We've actually been playing around this trend line, which, matter of fact, this trend line has been here all the way back. If you guys put this on your charts and you zoom all the way back, it goes all the way back until 2014. Actually, yeah, not December. Sorry guys, just going crazy. July of 2014, this ascending trend line that we got broken. We've been catching trades all week. The past couple of weeks, we've been catching a lot of trades. We caught a huge trade on the sell and the retest, or the break and the retest. We caught a sell on USD CAD, and then we also caught a sell up in this area. But based on just the way the daily candles look, not only on the daily and the weekly, but the daily, we have this very, very big bearish engulfing candle. This is actually a morning star candle formation. If you guys aren't familiar with that price action formation, definitely go ahead and Google like Morningstar Forex. It'll look something very similar to just like this. So I would be speculating that this week we're going to see this pair come up and retest the bottom side of this previous support trend line, which is up about another 150 pips. So this is a great opportunity. Wait for Friday's high to be broken before looking for a buy. Okay, so I mark off Friday's high at 131.57, maybe even put an alert there. If you guys use TradingView, you can just throw in an alert, tell it to send you in a text when it crosses it, and then boom, you have some confirmation once you actually see a 4-hour candle or a daily candle close above it. But I will be bullish on USD CAD, even though we are below this trend line. I still think that the buyers are just going to come in and basically trick all the people that are selling, because there's been a break of this trend line, and I'm sure lots of people have this trend line on their charts. Not to mention, also going back to our moving averages, we have these 3 weeks that actually tested this moving average, actually dropped below the moving average. That's what we call by testing it, okay? But they were all rejected at this moving average. So I think this week we'll kind of form another blue bar up just like that, kind of a little bit of consolidation, but still opportunities to buy this pair. Yeah, lots of people in here today, Jonathan. Tons of people. All right, finally, USD JPY. Okay, guys. So just to recap real quick, if you guys are just tuning in, okay, these are what my opinion are the best trading opportunities this week. I think gold short once last week's lows are broken. A Euro USD short once last week's lows are broken. Okay. Also, a NZD USD short once last week's lows are broken. AUD USD short once last week's lows are broken. USD CAD is great also. Pound dollar is good also, but we're more focusing on gold, Euro USD, NZD USD, AUD USD, and then finally USD JPY. Some beautiful price action on this pair. Absolutely beautiful price action. Last week we saw a bullish exhaustion candle / doji form on this pair, and then this week we've seen even more bullish exhaustion candle and bullish engulfing candle. Okay, so you see how the body engulfs last week's body. So huge signs to the upside. We're also playing right around the 100 weekly moving average on this pair, so there's great conviction to the upside, but we need to see last week's highs broken before we start to buy this pair. And some of you guys might be thinking, oh, you might be crazy for looking at buying this pair, but just wait, guys, just wait. Sundays can be trick days, and by no means am I talking about scalping right now. Keep in mind, make sure you guys understand that when you guys are watching these webinars, that they are called weekly webinars for a reason. Okay, this is my weekly analysis on these pairs. If you guys want more in-depth daily analysis, be a part of my premium group where I do analysis every single day on the lower time frames. We actually take trades live. Occasionally, usually we'll take 1 or 2 trades live. You guys get to see my MetaTrader live accounts, live entries, live everything, live calls. So it's a really good opportunity for you guys to learn if you guys are trying to learn for yourselves. But do take everything I say with a grain of salt, because there's absolutely no reason why this pair couldn't drop 50 pips before starting to move up. And these moves to the top side or whatever pair I'm talking about might not happen until Tuesday or Wednesday or Thursday. They might happen now. So take everything I say with a grain of salt. I know a lot of people that you may watch that do analysis, or a lot of groups are focused on primarily like scalping and lower time frames. I am not. I like using higher time frames. A lot of premium signals though that I give out, we do use lower time frames though. But again, I'm just referring to this analysis for the weekly analysis. Okay. Sheldon, you said you're hecka bullish on USD CAD and USD JPY. Awesome. Great analysis. Great analysis. If you guys are swing traders, by all means, remember, if you're using great risk management, right, you could be buying this pair with extremely small micro lot sizes and having, about a 75 pip stop loss below about this support area, but also about halfway through last week's average true range. So lots of opportunities this week. So just one more recap, guys. Gold. All right, so I'm just going to recap the pairs that we're looking at. Gold, this bearish engulfing candle, we're looking for signals to sell this pair for it to go lower this week. Euro USD, we're looking for sell signals for this pair to go lower this week based on our bearish exhaustion candle. Gold is based on our bearish engulfing candle. Also Euro USD, this previous weekly resistance that we tested last week. And NZD USD, we're looking for a sell once we see last week's lows and this channel broken. Okay. AUD USD, we're looking for sells once this support, this sideways consolidation, sideways support has been broken. We're looking for a retest and then a sell. All right. And then finally, USD JPY. All right. We're looking for a buy on USD JPY. Ideally, we're going to want last week's double top on the 4-hour broken. Okay. So you guys can see this double top that we formed last week right in this area, right in this zone. Okay. Once that gets broken, there's going to be a significant move to the upside, something like this. All right. But mark my words, guys. You know, I'm not right all the time, but I am. I feel like I have some pretty good knowledge in markets. If you guys have been following me since I started Positive Traders back in June of last year, you guys can attest that I definitely know what I'm talking about in the markets. So, but you can be wrong once in a while, right? One thing, just one fun fact I learned a few weeks ago that I want you guys to all, you know, keep in mind in the back of your head is the best hedge funds in the world, right? The best Forex traders in the world, people that manage billions and billions and billions of dollars of clients' funds, lose 3 months out of the year. Okay. The best traders are about 75% profitable. Okay. So that being said, you know, but that doesn't mean that they end the year off with a loss. It just means that because they have good risk management, they can take 3 months of losses. And that doesn't mean all 3 months are going to happen right in a row. So, you know, it might be 1 month in a row, 2 months in a row, 3 months in a row, whatever. But 3 months out of the year, total added up, the best of the best lose 3 months out of the year. So keep that in mind, guys. Keep those risks low this week. If you guys have any questions, throw them in the chat room. But once again, I would like to say thank you to everybody in here. Stay tuned for some signals in Telegram this week. Lots of trade ideas going to be getting thrown out this week. Be careful about Wednesday's FOMC. Be careful on Friday's non-farm payrolls. There's going to be 2 huge market movers. Of course, there will be some news in between there that will move the market as well for other currencies, so be aware of those. But if you guys like what you've heard today, go check out our website, positivetraders.us. Learn more about our premium group. Like I said, we've got daily live sessions, a free trade copier for premium members, and of course, about an average of 10 signals, all with exact entry, stop loss, and take profit. Okay, I'm never going to tell you guys in the premium group to just buy here, you know, because I'm always going to give you guys a good stop loss. Every single trade is always at least 1-to-1 risk to reward, if not better. And there's always a complete analysis of every trade. So take everything I said with a grain of salt, guys. Have a great weekend. Have a safe trading week. Let's make some pips this week, guys. Let's finish off the month strong. Let's head into February even stronger. And yeah, let's just catch some pips this week, guys. Have a great week, guys.